Ladies and gentlemen, good day and welcome to the Can Fin Homes Limited Q1 FY23 earnings conference call hosted by Investec Capital Services. As a reminder, all participants' lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note this conference is being recorded. I'd now like to hand the conference over to Mr. Nitesh Jain from Investec. Thank you and over to you, sir.
Thank you, Vikram. Good afternoon, everyone. Welcome to the Q1 FY23 earnings conference call of Can Fin Homes Limited. To discuss the financial performance of Can Fin Homes and to address your queries, we have with us today Mr. Girish Kousgi, MD and CEO of Can Fin Homes, Mr. Amitabh Chatterjee, Deputy Managing Director, Ms. Shamila, Business Head, and Mr. Prashant Joshi, CFO of Can Fin Homes Limited. I would now like to hand over the call to Mr. Girish Kousgi for his opening comments. Over to you, sir.
Good afternoon. Welcome to the earnings call. I will not get into numbers in detail since you have gone through the numbers. I'll quickly give you a brief. Then we can open the floor for Q&A. It was a good quarter. Quarter one was really good for us. So approvals stood at 1,750 crores, which is up by 111% on a YOY. A disbursement at 1,721 crores, up by about 93%. Book from 22,221 crores, it went up to 27,538 crores, which was an all-time high of 24% in last 21 quarters. There was a good growth in NII at 38%. PBT at 50, PAT at 50. We were able to maintain GNPA at almost same levels. It is 0.64 last quarter, and this quarter it's 0.65. On the net NPA, it's 0.3. ROE, I think on all the parameters there has been improvement. In terms of NIM, last quarter was 4.07. This quarter is 3.6. So NIM basically has three components. One is the interest income, second is other income, and the third is income on the investment. So last quarter NIM, what we saw was a bit of an aberration because we made a lot of investments in the last part of the year, and therefore if you discount that, I think NIM would have been some 3.8%. So against that we are at 3.6. This has an impact to a certain extent on disbursements and other income. Spread is at 2.66%, so we have improved over last quarter. Cost to income is 15.84. Again, I think as a guidance we will be anywhere around 18-19% on a yearly basis. Profit margin has improved to about 27%. PCR, I think this margin improvement 54%. And credit cost is almost zero for this quarter. In terms of yield, portfolio it's 8.46% and incremental yield was 8.21. Cost of funds portfolio was 5.8 and incremental was 5.67. Cost went up. Cost is going up since last few months because even repo has gone up twice. We increased the rates last year, so that benefit we are seeing now, and therefore we see improvement in yield, which has led to good profitability in this quarter. I think last quarter we discussed about audit and all. So we have, based on the board's direction, we have done audit in all the branches, all the 200 branches. We have done audit. There were observations, and most of the observations are now rectified, and we identified small irregularities totaling to around 2.43 crores, which is fully provided. So that inspection was done by our internal team to a certain extent and statutory auditors. So we had various statutory auditors appointed. So together they covered all the branches. It was concluded last month, and the impact of that additionally it's about 2.43 crores and it is fully provided. So last quarter what we had provided was 3.93. Out of that, 1.4 crores is closed. That loan is closed. So that book has now come down to about close to 2.5. Incremental is 2.43. So I would now request to start Q&A.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Shripal with Equirus. Please go ahead.
Hello, sir. Thank you for giving me the opportunity and congratulations on good set of numbers. So you highlighted about the audit that was run internally, but there was also an audit which was conducted by Canara Bank, which you highlighted during the last quarter. So was there any observation from there? And also, what is the nature of irregularities that you have found in your internal audit?
So basically, Canara Bank audit was, last time we had covered that in the results. So after that, we got all the branches audited based on the board's direction, which was done by internal team 25% and 75%, branch statutory auditors. Okay. So basically, these are multiple audit firms. We had engaged them to do the audit. Okay. Now, last quarter we covered based on the Canara Bank, audit. We had identified irregularity to the extent of 3.93 crores, which was provided in quarter 4. And out of that, close to 1.4 crores loan is closed. Now the outstanding is about 2.5. And in this audit, after auditing all the 200 branches, irregularity is 2.43 crores. Now, so this is the outcome of the inspection or audit in all the 200 branches.
So what would be the nature of this irregularity? Like, if you could throw some...
Irregularity, this is basically, financial documents forged or something like that. Basically, these are frauds.
Okay. Got it. So with respect to the rates, like on the yield side, so the rates that we would have offered to our customers during, say, January 2021 to March 2021, now that would have got repriced during this Jan to March 2022, right? So what would have been the repricing now, like for these customers that we would have disbursed loans for?
Now, see, this reset happens once in a year. So depending on when the loan is paid, the reset happens. So all the loans which we had given last year, so after 12 months it will get reset.
And the reset increase would have been like by how many percentage or basis points?
So I told you, now the yield is about 8.46. Incrementally it's 8.21.
Okay, got it. And then one last question on the credit cost side. So while our yearly guidance is for 40 basis point, and like we had created buffers during last quarter and which we've reversed during this quarter. So just wanted to understand, like, are we still sticking to the 40 basis point credit cost guidance, or would we be revisiting it now?
No. I think we were referring to two different data points. So if you're talking about credit cost for the year, it will be there is no change. It will be about 0.2 to 0.24 in that band only. So if you take overall, it comes to 0.4. I think that was because we were talking about two different things in the last con call. So if you have to talk about credit cost during the year, I think which is basically charged to P&L, it will be in the range of 0.2 to 0.23.
Okay. Got it, sir. Thank you so much, sir, for answering all my questions.
And also you asked about the kind of irregularity. I think there are two parts. One is with respect to financial statements, financial documents, and second, there could be some deficiency in properties, which I'm talking about 2.43 crores.
Sorry, sir, what did you say? Properties?
No. This 2.43 crores irregularity, which means basically fraud. So the deficiency would be with respect to either property or with respect to financial document.
Okay. Got it. Thank you, sir. And good luck with the next quarter, sir. Thank you.
Thank you.
Thank you. We have next question from the line of Ankush Agrawal with Surge Capital. Please go ahead.
Hi, Mr. Kaushal. Congrats on a good set of numbers. So again, on the audit, so just seeking some clarification, what you said was in the last quarter, the Canara Bank audit resulted in what we call the 4 crores fraud that we discovered, right? And the same was provided last quarter. And this quarter, based on our internal audit that we did across all the branches, we again found about 2.5 crores of fraud. That is what you meant, right?
It's not only internal, it is partly internal and partly we had engaged audit firms, external audit firms to do it. So it is 25% our own audit team and 75% we had engaged external auditors.
Right. And this additional fraud is relates to branches that are not the same, right? It belongs to the other branches that was covered in the last fraud that was just discovered, right? So these are different branches.
So this audit covered all the branches, which includes the earlier branches.
Right. But the additional fraud of 2.4 crores was discovered in different branches, right? It's not the same branch.
So it was in the earlier we had one branch, so there were some incremental cases and we had few other branches also.
Okay, 2 more branches also. So sir, any kind of communication that we have made to say NHB or Canara Bank, and have we got any kind of response on that on the findings of this audit?
Nothing. I think whenever we detect a fraud, we have to report to the regulator. That we have done.
Right. So at the moment, it's like status quo, nothing communicated from the auditors, from the regulators. Right?
So it's status quo because you would appreciate the fraud is part of normal business risk, right? And now we have covered all the branches, entire 200 branches.
Okay. And we would have taken obviously the steps necessary to curtail this, right?
Yeah, absolutely.
Okay. Got it. That was all. Thank you.
Thank you. We have next question from the line of Shubhranshu Mishra with UBS. Please go ahead.
Hi, sir. Good afternoon. Thank you for the opportunity. Couple of questions, sir. On the outstanding book, can you split the book into Cat A, Cat B, and Cat C customers? And what's the respective FOIRs for each one of them, and the average income that we take for each one of them? And same on the incremental book, which is on the disbursements. And my third question would be on the concentration of the book. So what proportion of the book presently is based out of Bangalore, and what proportion of the book is based out of Karnataka? Thanks.
Okay. So in terms of profile, we focus on Cat B, Cat B customers, and within that, 50% would be government, 50% would be private. In terms of income, average income would be anywhere between 38 to 40,000 per month. That's the income bracket. And in terms of concentration, I think we are well diversified. And Bangalore, in fact, Bangalore is major portion in Karnataka. I think Bangalore contributes to about 20%, and if you take it Karnataka, about 22%.
And FOIR of each of these categories, sir?
Come again, sorry?
FOIR while originating.
FOIR?
Yes, sir.
No, that will be common across. See, FOIR also depends on the income level. So basically, I think the entire industry operates on lower the income, lower the FOIR, higher the income, slightly higher the FOIR. We have a step-up FOIR matrix. So based on that, we fix the FOIR. So it starts from 40% for us.
Right. Thank you.
Thank you. We have next question from the line of Onkar Gungardare with Shri Investments. Please go ahead.
My question was regarding the AUM dispersal and all the growth metrics. What would be your guidance for the full year, sir, in terms of all the...
It will be around 18%.
18%, right?
Yeah.
And what kind of yields you are looking at?
see, we have been saying this that spread of 2.4 and NIM of 3 would be the threshold what we would maintain. So today,
NIM
if you
of
look at
3.
NIM of 3. Today NIM is 3.6. So for next few quarters, it will be hovering around 3.5, 3.6. I think on a steady state, long term, I think we would protect 2.4 and 3.
2.4.
Spread of 2.4 and NIM of
and NIM of 3.
This is the threshold. Yeah.
Okay. And any capital raise planning you are doing?
Yeah, we are planning to raise capital this year. So it will be part of the enabled amount, which is about 1,000 crores. We'll be raising some portion of the 1,000 crores.
So this will be a tier 2 capital or what?
That we'll have to see. It will be tier 1 only. So we'll take a call at the appropriate time, but it will be tier 1.
And in terms of NPAs, what are you targeting?
See, we don't see significant change in NPA levels. We are at 0.65 now. So maybe 10 bits here and there, but we don't see anything beyond that. I'm talking about this year.
All right. Thank you.
Thank you.
Thank you. We have next question from the line of Anuja Jalkar with Dalal and Broacha. Please go ahead.
Yeah, Anusha Raija here. I just want to understand, because of this irregularities, what was the cause of this? Was it people or the systems? What is the main reason behind it?
So it is actually combination since the amount is very less, considering the total outstanding, total book, right? And this is fraud is part of business risk, right? So in some places it was people, but it's not system. In some cases it's people, in some cases it is the channel partner. So it's a combination of all.
So, how do we ensure that such things may not happen in the future?
See, madam, I don't think so. Today, any financial institution would guarantee that no frauds would happen.
In just requestive effort to ensure that such things may not happen.
Whenever such thing happens, we identify and we do RCA and then we try to correct whatever we has to be corrected. But however, you must appreciate that since last so many years, every year or the other, there is some kind of fraud which happens or not. We should see what is the percentage of that in proportion to the book, and what is the frequency of that, right? So our systems are robust enough to prevent fraud.
And also, just want to understand, how are you seeing the demand for the housing loans in the rising interest rate scenario? Assume that even if you increase the rate, you feel that demand can dampen further, or how it will be?
I just covered that, so I told we'll be able to grow at about 18%. So that is taking into account interest rate increase, all possible economic factors which might impact. So we feel that around 18% should be decent enough growth.
Okay. And on the asset side, what are the loans that are fixed price ones and the floating based ones?
On the asset side, all the loans are floating only.
All the loans are floating, and the repricing happens once in a year.
The repricing happens once in a year.
So, when you do that?
Sorry? It's on an annual basis. It's on an annual basis. So once in a year.
That happens at the beginning of the year, middle of the year. I just want to understand.
No, immediately after 12 months.
Okay. Okay, sir.
Thank you. We have next question from the line of Pooja Ahuja with Monarch Networth. Please go ahead.
Hi. Thanks for the opportunity. So firstly, wanted to understand that on the disbursement part, where you've guided for an 18% growth, just wanted to understand the trajectory. While on a year-on-year basis, of course, we've seen a strong growth, but we've seen a sequential decline this quarter. So do we expect to go back to the disbursement levels that we saw in Q4?
I had told for the whole year, yeah, generally quarter one will be muted, compared to quarter four. So this is the industry trend. So I have told around 18%, taking into account for the whole year.
Okay, sure. And what was the BT out during the quarter? Just wanted to understand, has that thing normalized right now? I mean, what's the competitive intensity like with banks?
It normalized, I think, about 4-5 quarters back only. So it's around 100 crores for the quarter.
Okay. Okay, sure. That's it from my end, sir. Thank you.
Thank you.
Thank you. We have next question from the line of Ratik Gupta with Guardian Asset Management. Please go ahead.
Hello. Hi, sir.
Hello.
Yeah. So, sir, I was trying to reconcile the cost of borrowing for the bank, basically the funding basket. What I can see is the average approximate borrowing based on the annual report is approximately 6.5 to 6.6%. But the cost of borrowing that we are reporting is 5.8. So can you give a light on how is this actually be reconciled?
No, on portfolio, the cost of borrowing is 5.8. So if you look at the mix, today we have 54% is bank, 22 is from NHB, NCD 11%, CP 11%, and deposits 2. So I don't know from where you got the 6.5. Yeah, that's 6.5. If you could please help me, we can check and come back to you.
Yeah. So actually, I've taken the cost of borrowing based on your 2021 annual report, the average cost of borrowing for each individual basket, and based on that, I've arrived at it. Anyway, yeah, I can take this off. So my second question is, where is the minimum cost of borrowing that you see at 4C level? I mean, is it from the bank or is it from the NHB that you're assuming going forward?
As of now, it is NHB.
Okay. So NHB will have the lowest cost of borrowing from your end.
Yeah, NHB, then bank, then NCD.
Okay. And what will be the approximate rate for the bank?
See, now it will be, it depends, 6.1 to 6.2.
Okay. Okay. Thank you, sir. That's it from me. Thank you.
Thank you. We have next question from the line of Suresh Pal, an investor. Please go ahead.
Thank you for the opportunity, sir. I have two questions. My first question is, may I know what is the status of the restructured book as of now, and whether any loans from that book has slipped into NPA? And my next question would be, whatever guidance you have given, what are the things that you think can prevent us from achieving that kind of growth rate? These are my questions. Thank you, sir.
Restructured book was about 709 crores. So now out of that 45 crores the book has come down by 45 crores. So these are basically loan closures, either from own source or switch to other institutions. Right. So today it is 709 minus 45. That's the outstanding book from the initial level. As of now, no account is NPA from restructured pool.
And sir, my second question was, what are the things that can prevent you from achieving 18% growth guidance that you have given?
Okay. So if you look at the performance since last 5-6 quarters, I think you're seeing growth on all the parameters. Market is quite robust. Real estate industry has revived, and it is reviving, right? Interest rate, of course, there has been increase. I think last two changes were on the higher side, and one more time I think rates might go up. We have factored all these things, but I think what we should talk about is demand. Demand is very robust. Since demand is so robust, I know that there will be some impact because of increase in cost and also because of increase in cost of construction. So I know that construction cost has increased and cost of funds will go up. In spite of that, I feel that achieving about 18% growth shouldn't be a problem given the the architecture what Can Fin has in terms of sourcing, underwriting, and servicing the customers.
Okay, sir. Thank you, sir. That's from my side.
Thank you. We have next question from the line of Krishnendu Saha with Quantum AMC. Please go ahead.
Thanks for most of the questions being answered. But just a couple of small things. Levers at 8, where do you see a lever going at? And just on the repricing, if I'm to understand, our assets are on the external benchmark. So what is it benchmark to? Treasury, repo, what is it? Because we're doing repricing once a year, so my understanding it's released repriced every 3 months. So could you just explain that? And if you can expand, and how many branches you could see? We will start at 187, I suppose. So what do we see? Thank you. These are the questions from my side. Hello.
I really couldn't hear properly, but what I understood was what is your benchmark rate? That is one question which came to my mind. And I couldn't follow the other.
Sorry, let me start all over again. Just on the lever side, we are on 8%, 8 times. So how much debt do we think will go ahead to the lever part? And second is that we reprice our assets once a year. So right now, what of the book is linked to the external benchmark, and what is the benchmark? So like I suppose it should get repriced. I was under understanding that it get repriced every 3 months. So what is the benchmark, and what is the or how many branches do we expect to expand in the coming years? Or because our productivity is increasing at the rate of 7% per branch. So what do we see out there? Thank you.
Okay, our rack rate now is 8.25%. Our DR is now 7.84, and as per the regulatory, I think up to 12 times is allowed. That's the borrowing limit. In terms of branches, we'll be opening about, we'll reach about 210, I would say.
By the end of the year?
By end of this year, yeah.
Yeah, and you said the lever is going to be 12 times. That's the max you're looking at. Get that right?
12 times is the maximum permitted by the regulator, I said.
Yeah.
How much are we looking? Banks are comfortable, who are lending is comfortable with around 80 shares. So, depending upon the situation, we plan to think about the capital raising. You are referring to the capital raising and referring if that is what we have been planning.
Okay. And what portion of our book is to EV external benchmark? What is the benchmark? Can you tell me, please?
You are referring to the borrowings?
No, for not the asset side.
Our advances.
Everything is in a way linked to PLR.
Yeah. Okay. I'll get back. Thanks.
On the asset side, yeah.
Thank you. We have next question from the line of Franklin Moraes with Equentis Wealth Advisory. Please go ahead.
Yeah, thanks for taking my question. So, sir, just in case, in terms of the fraud, what were the total number of branches that were impacted by this?
4.
4 branches. So initially it was it was 1 branch, right? So on subsequent.
Yeah, initially it was 1 branch, correct.
Okay, but at that time the quantum was also about 4 crores.
3.93 crores, correct.
Correct. So now also our outstanding quantum still remains at 3.93 crores, which has come down now to 2.43 crores.
If I have to club both the quarters, last quarter, now the outstanding is about 2.5 and now it is 2.43, so both put together less than 5 crores.
Okay. And sir, are all these borrowers standard as of now?
No, in 1 branch all the accounts are standard. In the other branches, it's in different buckets, SMA.
Okay. So they have.
In terms of DPD, they are standard, but since we have declared as fraud, so we have forced marked as NPA. So any account we declare as fraud will be forced marked as NPA, which means technically all the accounts are now NPA.
Okay. And sir, in
spite of customers paying on some of the accounts.
Okay. Sir, and also Canara Bank had deployed some personnel, I believe, in risk and audit team. So are those personnel still being deployed?
I think I've clarified this in the last con call only. I think it is a regular normal process, So they have deployed. Whenever they deploy, it's for a 3-year period. So that is on.
Okay, got it. And sir, last question, in terms of your salaried share, that has been, on the rise. I believe we want to kind of try and reduce that share, but so far, that number is a bit sticky at about 74%. So could you throw some light in terms of, what is the trajectory that we are looking?
We are looking at 70-30. It used to be 70-30, and when COVID started, this 30 came down to 12, and 70 increased to 88. And when things started improving, from 88 it has now come back to 74, and SCNP is 26. I think in another few quarters it will come back to original 70-30 mix.
Okay. Yeah. Thanks a lot.
Thank you.
Thank you. We have next question from the line of Subrat Dwivedi with SBI Life. Please go ahead.
Yeah. Thanks for taking my question. So on the restructured book, just wanted to understand how much was the moratorium given, and by when are the loan payments resuming on this account? That's the first question. Second, just wanted to know the stage 2 numbers.
Okay, so we have in different buckets. So it is a combination of morat and then step up EMI, in some cases full EMI. So we have a combination of that. So the initial amount was about 709 crores. Now 45 crores is closed. Now most of the accounts have not fallen due. So it will start falling due maybe after 2 quarters or so. Having said that, we had initially anticipated the 7% of the book would flow to NPA. That is, if it is a book of 700 crores, we were anticipating 50 crores to flow as NPA. But I think now we are moderating that number to about 5%, which means 35 crores. So initially this number was 49 crores, and now we are anticipating 35 crores. That is for the simple reason most of the accounts, even though restructured, customers have started paying back. So in terms of percentage, it's close to about 17 to 18% of customers. They have already started paying, even though EMIs are not due. Okay, and therefore this percentage of 7 is now moderated to 5%, which means 700 crores into 5% is about roughly 35 crores, which might slip into NPA over a period of time, let's say next 5 to 7 quarters. Having said that, we also have a large NPA pool which we are working on the recovery front. So if you see the net impact, I don't think so our NPA level would drastically change. Today it is 0.65, maybe it might go by another 10-12 steps.
Okay. And the stage 2 number, sir? Hello?
Yeah, I'll just come back to you. We can move to the next question in the meanwhile.
That's all from my side, sir. Thanks.
71 crores.
471 crores is the stage 2 number.
471. Okay. Thanks a lot, sir.
Thank you.
Thank you. We have next question from the line of Rohan Advant with Multi-Act. Please go ahead.
Yeah, thanks for the opportunity. Sir, in one of your earlier answers, you mentioned that on credit cost, you expect what will hit the P&L is 0.22 to 0.24%, but overall it will be 0.4%. So can you explain what are these two different numbers that you are talking about, to clarify?
No. As far as the way we track, we mean you and I, both of us track is charge to P&L, that will be in the range of 0.2 to 0.24.
Okay. And so the 0.4 is what number then?
No, that is reporting to the regulator. That is overall, total on the portfolio. So incidentally, that comes to 0.4.
Okay. Got it, sir. That's all from my end. Thank you.
Thank you. We have next question from the line of Harshvardhan Agarwal with IDFC AMC. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, can you please help me with the total borrowing number on our balance sheet?
Sorry?
The total borrowings on our balance sheet?
Yes, our borrowings is 25,408.
It's 25,408. Sure. Thanks. And sir, another question is what is our incremental yield or the yields on the loans that we are underwriting now?
Incremental yield is 8.21.
So just wanted to understand, like if I were to look at your website, there's a PDF where we have given the yield, and on that thing the yield starts from 8.75. So I'm just confused as to why our incremental yields are at 8.2.
No, because we will have offers also. So if you see the weighted average, it comes to 8.21.
Okay. Okay, got it. And against this 8.2 incremental yields, our incremental borrowing costs are at 5.8.
Incremental borrowing cost is 5.67. 5.88 is on portfolio. Incremental is 5.67.
Oh, sure. Got it. Sure. Thanks a lot, sir.
Thank you. We have next question from the line of Ashwin Balasubramanian with HSBC AMC. Please go ahead.
Yeah, hi. Just wanted to understand on the borrowing side, how frequently is the rate reset, and what is the amount of borrowings which is linked to the external benchmarks?
In terms of frequency, I think whenever there is a change in repo, I think it's aligned with that. So the rate reset follows change in repo. In terms of external and I'll just tell you.
Yeah. So total books around 21% is linked to repo and 22% is linked to the T-bill and 7% is linked to the MCLR. Whereas NHB borrowings have a separate yardstick which is their internal rating. So it is a mixed bucket of borrowing.
Okay. So in terms of the borrowing cost then, because you mentioned the incremental borrowing cost is about 5.67. So that doesn't seem to have gone up much because the repo rate is moved up by 90 basis points in the past couple of months. So just trying to understand.
So this also would have a cost on CP. So this is weighted average incremental cost of bank, NHB, NCD, CP and deposits.
Okay, but even on the overall book it's 5.6, right?
So the overall book is 5.8.
Portfolio is 5.8 and incremental is 5.67.
Yeah, that 5.8 is moved from 5.5. In the coming quarters, that would reprice further higher by, how much ever the repo rate goes up by?
Yeah, it gets a mixed effect because repo rate T-bill link is there, so it cannot go parallelly. That much hike. We have to see how repo rate change is likely to take place.
Okay, thank you.
Thank you. We have next question from the line of Gaurav Jani with Prabhudas Lilladher. Please go ahead.
Thank you for taking my question. So firstly, last quarter you had quantified the treasury income impact on the NII at, correct me if I'm wrong, at about 16 crores. So what will it be this quarter?
Confirm you. Just carry on this call, I'll just refer and come back to you.
Sure. And if you could also help me out with the total investment income recognized in FY22, that would be helpful.
Sure.
So secondly, we saw a dip in terms of disbursals this quarter, while it could be, of course, seasonal, but the dip seems to be sharper. So that's one part of the question. So how would you sort of look at that?
Okay, in terms of amount, 16 crores this year, that is this quarter is about 22 crores. 22 crores. Referring to the disbursements, generally quarter one would be muted, in terms of disbursements, and generally NPAs would go up, and it will normalize, in subsequent quarters.
Because 18%, considering the 36% dip on a QOQ basis, seems a bit steep. So just wanted your thoughts on that.
So because this is a regular phenomena for the entire industry, not just for Can Fin. Generally, if you look at quarter one, because what will happen is after Q4, So quarter one, it will be slightly muted, and then they pick up from quarter two onwards.
No, what I was also trying to understand that, have we sort of reduced our aggression also more to, focus on quality customers, or nothing's rather changed much?
No, across, whether it is, depending on the early part of the year or quarter two, quarter three, or quarter four, I think quality of customers, that is very, very, I think that's paramount. And we have, enough filters to source while sourcing and underwriting. So quality of customers, is something that we always take care. So quantum of business doesn't determine on the quality necessarily.
So sorry, sir, you mentioned the figures for the investment income. So 22 crore is for the quarter, right? Quarter one.
Yeah, because we just started the year. Yeah, correct.
Okay, and what would it be for the entire year, FY22?
On this basis, if you calculate, because these are all, most of the investments are in government securities, so on this basis only it can be calculated.
No, correct. So I was trying to get at the annual report number of investment income for FY22. So if you could help me with that, that'd be great. So coming to the, again, the credit flow side or the disbursal side, wanted to understand that probably we have sort of, dialed down our guidance, right? Earlier we were guiding at about 20-25%, and right now we're guiding to 18. So any sort of, or the reason for change, or how should I look at that?
So as of now, if you're talking about disbursement growth, I think 18% is very much possible, because we've seen in the past few quarters that demand is quite robust, and 18% is something which we can achieve. So I know this is taking into account the increase in cost and also increase in construction cost, because these two would have some kind of impact on growth.
Right, got it. Sir, coming to asset quality, the restructured that declined by 45 crore, that was during the quarter, right? You meant?
No. This is not quarter. This is from the opening balance.
Okay, so from when? So what I'm trying to understand is between how many quarters did this 45 crore occur?
So this will be restruck, I think, last 3 quarters, I would say, because once the restructuring window was closed.
This is started from, actually, for the month of December 21 to June 22, 7 months period. It is 45 crores. 45.49 crores.
Got it. So the fraud total amount that you mentioned of 5 crore, how much of that is provided?
What 5 crore? Sorry?
The
entire amount is provided. Full of 100%.
100%. Okay, perfect. So last 2 questions from my end. You mentioned that some other branches also saw this phenomenon of fraud coming through. Were there from the same locality, or those are spread across India?
It is different. It's a different region altogether.
Because I think the first one cropped up from Rajasthan, but so were they from the same state, or
Then, no. Then the other things cropped up from Tamil Nadu and Andhra. And the modus operandi is different. So these are for different reasons.
Okay, got it. So lastly, you mentioned that Canara Bank personnel are deployed every 3 years. My question is, when was the last time they were deployed?
No, it's not every 3 years they deploy. Whenever the deployment happens, it's for a period of 3 years generally.
No, that I understood. What I was trying to ask you is, when were they last deployed in Canfin?
So, see, I'll tell you, this used to happen, in the past quite frequently. After that, at a senior level, there were people being deployed, let's say, at MD level, or maybe at the DMD level. So now DMD level is continuing, and we also have now some people in various departments, as we explained in the last quarter.
Okay. No, just was trying to understand whether that, earlier whenever the deployment used to happen, was that in the regular course of business, or were there particular reasons for that?
See, this deputation used to happen before, it is happening now also. It may happen in future also.
Regular course. It is the regular course of.
Sure. Appreciate your answers. Thank you. That's it from me.
Thank you. We have next question from the line of Ritika with Ocean Dial. Please go ahead.
So thank you for the opportunity. Firstly, sir, if I could just request again to share the incremental yield and cost numbers.
Incremental yield is 8.21, incremental cost is 5.67.
8.21 and 5.67. And sir, and the reported number for this particular quarter?
So that is on the book. Now yield is 8.46 and cost is 5.8.
Okay. So sir, just how to maybe reconcile these two numbers?
No, incremental is for the quarter and book is entire book.
I mean, both are actually lower than the blended. So is there something which I'm not getting correct?
No, madam, one is on the book and one is incremental. See, for example, one is the entire portfolio. So let's say our book is
incremental yield last quarter?
You are referring to the March one, madam?
Yes, sir.
March. Cost is 5.
No, yield.
Yield is 0.07.
8.07.
8.07. Okay.
Last quarter, incremental yield was 8.07, and this quarter it is 8.21.
Okay. And sir, if you don't mind again, just explaining again the 40 basis point and the 20 and the 24 basis point.
No, 40 basis point, that is different. That is to report to the regulator. The way you calculate credit cost is charged to P&L every year, correct?
Right.
So that will be between 0.2 to 0.24.
So sir, what additional goes to the regulator? I mean,
that is overall.
Portfolio, madam.
That's on portfolio.
What we hold total provision in the books of account.
Oh, okay, understood. All right. Thank you so much, sir. That's it from my side. Thank you.
Thank you. We have next question from the line of Dhruvish with Mirabilis Investments. Please go ahead.
Yeah, hi. Thanks for the time. So I have 3 questions. First, wanted to understand the unutilized buffer which we have right now, and when do you expect it to run down?
So we have liquidity. We're holding liquidity of about close to 3,000 crores.
3 months.
So it will take care of 6 months approximately.
I'm referring to the unutilized COVID buffer, which was I think some 29-30 odd crores.
No, we don't have any COVID buffer. We have withdrawn entire amount.
Okay, so the 3.7 crore which got utilized ends the total buffer, right? Like
which 3.7 crores?
Which got utilized in this current quarter.
No. COVID provisioning we had withdrawn long back.
Okay. So this 3.7 came from where? This utilization?
We had additional provisioning under general category, not under COVID.
Got it. Okay. Yeah. And secondly, I want you to understand that when the yields go up, so do we increase the tenure of the borrower or the installment goes up?
So we'll see, depending on the residual, age of the customer, we increase the tenor. Or if customer intends to increase the EMI, we increase the EMI. So basically, we go by whatever customer chooses.
Got it. And the BT out of 100 crore which we mentioned. So, can you name the banks which took those banks or NBFCs which took those accounts? And secondly, what was the reason for that? So was it some top-ups we couldn't give or some aggressive pricing by them? So yeah, that is the question.
Normally, we have a bank institution list which is more than 20. So it is spread wide across. And reasons are both. One, in terms of incremental exposure, additional exposure, and rates.
Okay. So can you name some banks or NBFCs which took it over?
You name the bank, it will be right, because almost all the banks would take over. So private, the PSU, HFCs, large HFCs, mid-size HFCs, so NBFCs.
Got it. So largely this came because of aggressive pricing by them, or because of top up which we couldn't give. Like, which was the bigger reason for the BT? I know the number is normalized, but still trying to understand why is it happening.
So I think if we compare both, I think it will be skewed towards pricing, and this is a regular phenomenon.
Got it. And my last question is on the branch expansion. So like, I think in Q3, which is some 6 months back, we had mentioned some 12 to 15 branch expansion, which we expected in FY23. Now we are down to 10 branches a year. And if we look at the last 2 year branch expansion, we have like done just two branches. So like, why is this like stagnant? And secondly, so if you look at the lever of the growth in last 2 years, whatever happened was due to the operational efficiency. So like our business done per branch was some 100 odd crores, which is now up to 147 odd crores. So like, what is the cap of this? Like, this can't go above 160, 170. So what are your thoughts on that? And like, why is the branch like expansion stagnant? So yeah.
So it was more of a strategy, and also because of COVID, we couldn't really expand. But having said that, our current set of branches would be able to grow the book right up to 40,000 crores. Having said that, by this year end, we would reach about 210 branches.
Okay. So do you have a number in mind where you think that the capping of branch efficiency, so like business done per branch can't go about 200 crore, which is at 147 crore right now? Because if we do the math, like if I take the same branch efficiency of 147 crore and add up the 10 branches, still 18% growth seems quite unlikely. So trying to understand how much headroom more we have with respect to branch efficiency, like business done per branch. Like if you can say a number.
Basically, it's function of two things. For a minute, I'm just leaving the branch expansion. Out of existing branches, it's function of two things. One is potential in the catchment, and number two, adding manpower. So by doing these two things, we can, with the existing set of branches, we can grow up to 40,000 crores. Having said that, we also have a plan. Every year we'll open a set of branches, and by this year end, we'll be at 210.
Got it. Okay. And last question. So wanted to understand how different is the cost in setting up of satellite center and affordable housing loan center vis-a-vis a branch, and the operational metrics for the same. So yeah, that's the last question.
I think the cost is the cost difference is very less. So I think the category and tagging is more to do with the location and potential, not with respect to cost. There's no much difference in cost. That's what I mean to say.
Okay. So if we look at the satellite center and affordable house loan center business done per branch, what would that be, like 40-50 odd crores or maybe more? Hello?
So in fact, see, when we open branch now, we are opening the regular branch. We are not opening any satellite center. No, because satellite center only in terms of the office space, it will be less in number. Manpower deployed would be less. It will be tagged to the nearest branch. So since we see opportunity in every pocket, now we are opening only branches in all the pockets, and over a period of time, even the satellite centers will be converted as branches.
Got it. And the 10 branches which you mentioned, which you plan to open this year, that would be in the locations, like can you name the states or the locations broadly?
For example, it will be Karnataka, then Andhra Pradesh, Tamil Nadu, Maharashtra, Rajasthan, so across.
Okay. Got it. Yeah. That's it from my side. Thanks.
Thank you.
Thank you. We have next question from the line of Mudita Nahar with Abacus AMC. Please go ahead.
For the opportunity, sir. Most of the questions are answered. Just one thing I wanted to ask, sir, on the overall portfolio, how much percentage we have repriced this quarter, sir? Loan book?
Approximately about, see, I'll tell you every quarter, I'll put it this way. So whatever business we do this year, for example, roughly about 20-21% get repriced, in a quarter.
Okay, sir. That's it from my side, sir. Thank you.
Thank you. We have next question from the line of Sanket Chheda with B&K Securities. Please go ahead.
Yes, I had two questions. One was that we said the reset on asset side is yearly, right? But it would depend on the origination of loan, and basis which every quarter there will be certain loans which will be up for the repricing, right?
Not every quarter, every year.
Yeah. And the second question is, sir, on restructuring. Now we have about 650 crore of restructuring left, 660 crore. So on that we would be having 10% provisions, which is like 70 crores, and we say that we expect 35-40 crores to slip imminently. So on that, even if it falls to NPA, you need to provide 25% of it. That means 10, 11, 12 crores would suffice. So that will release up to say 50 crores, even if on conservative basis, if you want to put higher PCR on the NPA, then also 40 crores of amount it would release. Now, whether you want to take it as a write back or not, but is that understanding correct, that we may have 40 crores available as we head into Q4, which will then decide that whether to have a write back or keep it on the books?
We will have write back from the restructured provisioning pool. Your calculation is here and there it is right, because we foresee 35 to 40 crores. So I think to that extent, whatever is the balance, pool will be available for writing it back.
Sure, sir. That was the only question.
Thank you. We have next question from the line of Nischint Chawathe with Kotak Securities. Please go ahead.
Hi, thank you for the opportunity. Just trying to understand, your borrowings from NHB are around 22%. What are the terms of these borrowings? Are these fixed rate or are these floating rate, and under which scheme?
So it's actually a mixed set. It's a blend of both, but the overall cost would still be much cheaper when compared to banks and NCD. So it's mixed, because partly it will be fixed and so some portion of loan will be actually it's fixed for 3 years and then it will be floating, so it's like that. But overall blended rate would be much lower. As of now it's around 5.4, 5.45, which is the lowest.
And any large block of this which is probably getting redeemed or repriced this year?
So these are a long-term
10 to 15 years tenure loans.
So 10 to 15 years. So it will not bunch up in one particular quarter or so. So yeah.
So 10 to 15 years, but probably getting repriced every 3 years. So nothing kind of comes in and changes that significantly this year.
The reprice happens whenever there is change in repo. Whenever the rate goes up, repricing happens. I mean outside the fixed rate bracket.
Perfect. Your cost of funding of around 5.8. If you could kind of just give some sense in terms of where do you see it heading by the end of the year?
I'm sure you can estimate it. I think rates will go up. So I'm not sure to what extent. I think in next 8 to 9 months still there will be at least one increase, maybe 35 to 40 bits.
Sure, which would affect the book. Sure. Just 2 data points. If you could share the absolute number of amount of stage 3 and stage 2 loans.
Yeah, 1 minute.
I think you shared the number, but I missed out. So.
Yeah, sure. No issue. And I think in the middle, let me just clarify on the other point which Saket asked. So while I clarified on the restructured provisioning pool, we also have a NPA pool. So from that we are expecting about 40 to 45 crores of recovery.
The stage 3, as we told in the NPA figures, only will be in the stage 3, that is around 180 crores. And stage 2, that is SMA 2, as I informed, it is 471 crores.
Sure, thanks. Just one last point is that are you kind of contemplating doing co-lending with Canara Bank or any other bank?
See, I think there is if I'm not wrong, I think there is regulatory restriction, to work on co-lending with the parent bank. But I think as a concept outside of what we discussed now, I think we don't intend to get into co-lending model.
I mean, any specific reason? I'm just trying to understand the thought process.
Yeah, I'll tell you why. So basically, my understanding is that co-lending is either to get the networking benefit or the pricing benefit. So today, in terms of cost leadership, I think we are one of the lowest in the industry. And as a company, we want to grow our book. And therefore, at this point in time, we feel that we have advantage on both the sides. Therefore, we want to leverage these two parameters and grow our book.
Sure. Then, if I can squeeze the last one, any plans on capital issuance?
Capital is, we do have plans here. This year, we will raise some part of capital out of 1,000 crores.
Perfect. Great. Thank you very much and all the best.
Thank you.
Thank you. We have next question from the line of Abhijit Tibrewal with Motilal Oswal Financial Services. Please go ahead.
Yes, thank you and thank you for taking my questions. Sir, please excuse me if any of my questions are...
Sir, I'm sorry to interrupt. Your voice is not very clearly audible. If you can please speak close to a mic or you can pick up your handset. Thank you.
Is it better now?
Much better, sir. Please go ahead.
Yeah. So, sir, please excuse me if any of my questions sound a repetition. I joined in a little late. So, firstly, I mean, this 18% growth that you're guiding for 18% growth in disbursements or your loan book?
Loan book.
The loan book, right? Okay, thank you. So, secondly, during your opening remarks, you suggested that during this audit process where you audited 200 of your branches, there were certain observations and those observations have now been rectified. So while you did touch upon, I mean, what were the observations, and like you said, it was either deficiency in financial documents or property, but I mean, just wanted to understand what are those rectifications that you have done with regards to this observation?
No. Financial, I think what you mentioned now is for the fraud cases, which is irregular cases, not the other observations. The 2.43 crores, that was the observation for that.
Okay. So when you said observations, you are not talking about fraudulent accounts?
No. When I say irregularity, that is fraud. When I say observation, these are observations. For example, let us say a BM is supposed to visit the customer and then submit a report. And in that report, let's say signature is missing. That is an observation. I'm just giving an example. So observation is different, irregularity is different. Irregularity is equal to fraud. Observation is equal to some kind of document incompleteness.
Got it. So this is useful. So secondly, what is the total quantum of provisions that you are holding on your balance sheet now? Understandably, you have already reported the standard asset provisions and the NPA provisions in your presentation. Is there a third component of OTR provisions as well?
I'll tell you. So standard asset is 101 crore. NPA is about 98 crores. Then for restructuring, both framework 1 and 2, we hold about 67.69. So totally we are holding about 267 crores.
Great, sir. Sir, and lastly, there was a provision write back that you did on your standard loans in this quarter. And why I ask this is, I mean, last quarter itself you had taken about, I think, 15 crores of additional provisions on your standard loans. So what is it that kind of changed in this quarter? Is it just because, I mean, the audit has now been completed and you are relatively more reassured is why we were taking this provision write backs on standard loans?
No, basically, we realized that, we will have a bit of cushion on the restructured provisioning pool. So that we are not withdrawing. So that we will leave it to accumulate and we'll have enough provisioning, buffer just in case we need in future. And therefore, this was withdrawn.
Can you please explain this a little better, sir? I mean, why was there was provisions which were withdrawn on standard loans?
What I meant was, on the restructured pool provisioning, we will have enough buffer which will get created in future quarter on quarter. So that we will not write back. We will leave it to accumulate, which can take care of any requirement in future. But for that, every month we would provide based on NPA, A in terms of new additions, B in terms of bucket movement, and for standard assets.
Got it, sir. This is very clear. And sir, congratulations on a good quarter and all the very best. Thank you.
Thank you.
Thank you. We have next question from the line of Naishi Shah with Echo Global. Please go ahead.
Hello. Hi, sir. Thank you for this opportunity. So I have a set of 2-3 questions. The first one is, what is the average loan tenure of the outstanding loans in your book?
Okay, I think loan on book average is about 8.5 years.
8.5 years. Okay. And so we know that, we largely do the affordable segment when it comes to the lending. And we know that NHB tends to refinance these loans. And there has been a marginal reduction on a Y-on-Y basis when it comes to NHB financing. There has also been an improvement when it comes to CP, the percentage of CP in our funding mix from 19% to 11%. So what levels are we targeting for CP, and even with NHB, what level would we be comfortable with?
So on CP we are okay around 15% plus minus 1%. Okay. Exposure from NHB, I think we are open depending on the available pool and appetite for us to borrow and for NHB to lend. So that is something which we will keep it open. We are pretty comfortable because the source of finance for us is really agnostic whether it's from bank or NHB, as long as cost fits into our structure. So as of now, NHB is very cheap, and therefore we are agnostic, and we'll be happy if the share goes up.
Okay. So please correct me if I'm wrong, but the loan tenure that we take from NHB is 10 to 15 years, right?
Yeah.
And what would be the case for banks? What's the loan tenure?
Largely 10 years, otherwise between 7 to 10.
Okay. And so we made a profit of 22 crores on our investment book, if I'm not wrong, this quarter.
Not profit, income.
Income. Okay. So this is all realized plus unrealized, right?
Yeah, this is what the investment we had made. We are made for the LCR purpose. We have invested for the SLR purpose and supportive for the purpose of OD we have invested. Totally around 1,500 crores of investment is there on book, which also funds.
Sorry, could you please repeat?
The interest on that investment is
okay. All right. Okay. Thank you so much, sir. That would be it.
Thank you. We have next question from the line of Anil, an investor. Please go ahead.
Thank you for the opportunity. Sir, just one basic question. You run a housing loan portfolio, and even your parent Canara Bank has a very active housing loan desk. So what is the difference? Is there a clear demarcation? What kind of book or what kind of customers you would look at vis-a-vis your parent, and how? I mean, has parent any time communicated how they want to take both the entities forward, or is there any plan in future whereby it can be clubbed and run by one entity? Thank you.
Two entities are different entities, and they have their own customer base and customer segment. And the way we have, let's say Canara Bank, we also have SBI, ICICI, HDFC, Kotak, and stuff like that. So as of now, there is no discussion or arrangement. So both the companies would independently try and build a mortgage book.
So there is no, ticket size wise, there is no demarcation. Can there be a case whereby both of you can cater to the similar customer base?
There is absolutely no arrangement at all. So we can do 1 crore, they can do 10 lakhs. We can do 10 lakhs, they can do 2 crores. So it's we don't have any sourcing or any demarcation in terms of either sourcing or lead generation or whatever. So these are two different entities. Canara Bank is our parent. Yes, but as far as demarcation or...
And secondly, sir, while this audit and investigation was going on, has it hampered your normal business routine? Maybe because of that your approvals and disbursement got delayed somewhat, or turnaround time must have gone up. Anything of that sort?
Yeah, I'll tell you, every year we do audit. Okay. And this time it was advised by board. The board had instructed, therefore we had conducted audit of all the 200 branches. Now, having said that, every quarter one, there'll be some dip in disbursement numbers, and there'll be increase in NPA numbers. This we have seen for last many years, probably decades, right? So I don't think so these two will have to be linked. Because as an organization, I think everything is important. For us, liquidity is important, asset quality is important. At the same time, audit is important, disbursement is important, growing book is important. So I think as a company, I think company should focus on multiple things. And quarter one happened to be, such quarter where we have to focus on multiple things, and we have managed.
Okay. And so last thing, this annual resetting that you do of interest rates, is that a normal industry practice, or in terms of frequency of rate changes, it could be slightly different from the industry? How is it like?
Basically, it is passing on the interest rate. I think how we should pass on, I think every board of the company would decide, and then the implementation happens. I think net what we're saying, we may call the different name. I think basically when the interest rate scenario is either up or down, I think same thing gets passed on. That's all.
Got it, sir. Thank you so much.
Thank you. We have next question from the line of Gaurav Jani with Prabhudas Lilladher. Please go ahead.
Thank you again. Just one question. So you mentioned about 20% of the loan book sort of reprices, right, per year. What would that number be on the borrowing side? I mean, just simplifying it.
No, on the borrowing side, I think the change would typically happen whenever there is a change in repo. So what I told was basically we have 12 months in a year, and so whatever I booked, let's say in the month of April, will come for reset in next April. And therefore, I've taken approximately about 7 to 8% every month. So quarter one being slightly low, I just took a number of 20%. Otherwise, it has to be 25 each quarter. So it start with 20 and then move to 22, 23, and then 26, and then the balance in quarter four.
So to put it another way, calculating the EBLR linked portfolio comes to about 50%, right? So that 50%, does it reset from day one or not?
So you are referring to the borrowing or?
Borrowing,
yes.
Yeah, our borrowings are linked to three different. One is the repo link, T-bill link, and MCLR link. This is the major consisting of around 50% will be on that one. NHB have their own yardstick, as I told earlier. CP and NCD market borrowing, which cost 25%, have the fixed rate. So it varies depending upon the tenure and the change in the repo and T-bill.
So basically, MCLR, repo link, and the NHB directly, indirectly is linked to repo change.
Correct. So my question is, sir, whenever the repo changes, the next day all of these reset or not?
No, they will be reset on a quarterly basis.
That will be on a quarterly basis. So the lag time could be 15 days, 20 days, 1 month, depending on when the repo increases.
Got that. Perfect. Thanks.
Thank you. Ladies and gentlemen, that was the last question. I would now like to hand the conference back to the management for closing remarks. Over to you, sir.
Thank you very much to all the investors who have stayed with us for a long time. And we had a good quarter, so we look forward for the rest of the year to be as fruitful as quarter one. Thank you so much.
Thank you very much, sir. Ladies and gentlemen, on behalf of Investec Capital Services, that concludes this conference call. Thank you for joining with us, and you may now disconnect your lines.